criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation.
The gloves are off. Fed Chair Powell casting off his so far restrained approach as the Trump administration opens a criminal investigation against him. Live from Singapore, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. The dollar and U.S. stock futures fall on fears about the independence of the Fed, even as Asian equities rise. Oil is holding its biggest two-day gain since October as escalating protests in Iran threaten supply from OPEC's fourth biggest producer. We'll speak with one of the most closely tracked voices on oil, Fereidun Fesharaki, Chairman Emeritus of FGE Nexant ECA. Indonesia and Malaysia block access to Elon Musk's AI chatbot Grok, while the UK and France launch investigations as the explicit deepfake problem grows. We'll hear exclusively from one of the leading authorities on AI and security. Georgetown Center for Security and Emerging Technology Executive Director Helen Toner joins us just ahead. Here's a quick look at the markets. Asian stocks moving higher, taking the lead from the U.S. rally on Friday, while oil is pushing lower. Traders sorting through a bevy of risks, including waves of protests in Iran, threatening the future of the Islamic Republic, and Fed Chair Jerome Powell confirming that the central bank is facing subpoenas from the Justice Department in the latest escalation with the Trump administration. Our Markets Live team says investors are seeking out potential havens in the yuan and the Swiss franc to diversify away from the dollar's weakness. Gold also hitting a fresh record high, closing in on $4,600 an ounce. And President Trump has denied having any knowledge of the DOJ's investigation into the Fed. In a brief interview with NBC News, Trump said he didn't know about the agency issuing subpoenas, but also said the move has nothing to do with interest rates. For more, let's bring in Bloomberg's Federal Reserve and economy reporter Enda Curran joining us from Washington. And what do we know about this investigation? We know that there is the Powell version and the Trump version.
Okay, at the very least, it's a spectacular escalation, Haslinda, in tensions between the White House and the Fed. We know, of course, President Trump has been so critical of both Chairman Powell and the Fed since he came back to office for not bringing down interest rates quickly enough. Now we have this new development of a threat of a legal indictment against Powell and the Fed for the cost of renovating the building there. Now, this is where the Fed have really pushed back because they're making the point that Chairman Powell was a very direct statement and a very unusual video statement, making the point that this is no longer about a difference of views on the economy. This is about a deliberate political attack on the Fed, a deliberate political attempt to take over the Fed and to steer policy in the interest of politics rather than economics. So you've had, on the one hand, as I say, an unprecedented move by the Trump administration, a pattern, but certainly ratcheting up to a new level. And of course, now we have the big pushback from the Fed and Chair Powell itself, which is equally unprecedented. So we're very much in uncharted territory here, and this is probably going to play out over many weeks and months ahead, I would say.
It is a long-standing feud between the Fed as well as Trump. And you got to wonder, will Powell keep his job? He says he will continue with his responsibilities, but we know Trump has come up with his own choice.
Yeah, so the thing about Chair Powell's position is he will finish up as chair of the Fed in May, and that's when a new chair will take over. But he's actually allowed to stay on the board until 2028. And this is what seems to be a source of tension for the White House, because if the thinking is if Chair Powell stayed on, he, of course, would have a different of opinion, would push back against Trump White House, wouldn't necessarily see the economy the way they see it, or wouldn't necessarily do their bidding, because President Trump has said out loud he wants to get a majority of policymakers on that Fed board who, of course, will see the economy the way he sees it, and that means he wants lower interest rates. So the critical question is whether or not Chair Powell would want to stay on the board after May. And a lot of people tonight that I spoke to are making the point that this is designed as pressure to get him out of there. No, this doesn't have a near-term impact on monetary policy, but it's certainly all about trying to shape and mold the Fed in the way that President Trump wants it.
And thank you, Bloomberg's Federal Reserve and economy reporter Anda Karan joining us from Washington. Now, President Trump says Iran wants to negotiate with a meeting being set up after a phone call between officials on Sunday. But he also warns the U.S. may have to act before any meeting happens after protests across Iran that activists say have left hundreds of people dead at the hands of security forces.
We're looking at it very seriously. The military is looking at it. And we're looking at some very strong options. We'll make a determination.
Earlier, Iran's president appeared on state TV trying to strike a conciliatory tone and offering condolences to families affected by what he called the tragic consequences of the unrest.
I acknowledge the concerns of our dear people, perhaps 80 or 90% of them, and I firmly assure them that we are making every effort to resolve these concerns. We will get through this crisis.
For the latest on Iran, let's bring in Bloomberg managing editor Jill Deeses in Hong Kong. And for a look at the market reaction, we have oil trading reporter Rongwei Neo. Jill, let's start with you. Where are we with the situation in Iran? There are suggestions that perhaps the government could be on the brink of collapse. Any signs of that happening?
Well, Haslinda, I mean, we are looking at what seems likely to be the most serious challenge to the regime since 1979. I mean, things have really escalated very quickly. According to human rights activists sort of monitoring the situation in Iran, there are at least 544 people dead in the aftermath of these protests, 10,000 people who have been imprisoned. So, again, obviously an incredibly serious situation that's developing here. I'll also take you to some of those comments that we just heard from the Iranian president, as well as from Donald Trump. Obviously, this is an incredibly delicate situation, but you both have this idea that there could be some kind of discussions between the U.S. and Iran in the form of, some sort of negotiations there. But obviously, Trump also saying that the U.S. government is considering some kind of military action, which does track with what we had heard earlier from a White House official, that there are some pretty serious options that are being considered here. So again, something that's developing very quickly, but it is very clear that this is a pretty significant challenge to the regime at this point.
What are the arguments for the U.S. to strike Iran, and what are the likely scenarios in the coming days?
Well, Haslinda, at this point, again, you do have some options for the U.S. to potentially strike at, even non-military sites, I believe, is something that was, under consideration, although this is, again, something that, the White House is weighing at this point. And, again, as we heard from Donald Trump just now and also earlier, I mean, the U.S. is clearly, backing these protesters. You have, Donald Trump who has voiced, actually, support for those protests. I think you've got a presidency in the United States that obviously is pretty emboldened by the recent ouster of Maduro in Venezuela. Maybe there's some consideration there in terms of how much regime change would be favored by the United States. But because this is unfolding so quickly, I mean, we're at this point, entering our third week of protests. You're seeing a map on your screen there, just showing how widely things have really spread, with reports of hundreds of thousands of people that have really taken to the streets. I think it's still in sort of that calculation phase as to how serious this can ultimately escalate, and whether this does actually represent a significant, serious challenge to the regime, and whether there could actually be any sort of significant change at that level. I think, again, it's incredibly fluid. We'll have to see how things develop. But, the U.S., as Trump has noticed, is considering many options here.
And Rongwei, how high are the stakes for oil traders? We had Venezuela, where, traders pretty much shrugged off developments there. And now we have Iran. We saw oil prices rise for 2 days and now easing off somewhat.
Right, so when traders took stock of what has happened over the weekends for the Iran situation, of course, as Joe has mentioned earlier, these unrests were seen as it's one of the most serious we have seen in years. There were a lot of concerns by the market as Iran, after all, it is one of the major oil producers, and any sort of unrest or political instability would actually result in some sort of a supply risk. And we have seen that played out in today's markets. Oil prices have went up at open, but as the market slowly digest what's going on that's between the US and Iran, they've gradually kind of weaned off the prices because they started to realize that everything is still in its very early stages. Although we could be seeing some geopolitical risks affecting supplies, but with the latest reporting we have, it's unclear if the unrests have actually affected the major oil producing regions.
The thing is, it is a market that is in a glut. Is there enough buffer to overcome all the complications or perhaps the supply hit that we may see on Iran?
So Haslinda, as you rightfully said, we are on track for a record oversupply this year in oil markets. It's a bit of a down market right now, so any sort of near-term supply risks shouldn't really play out in the long run. So let's take the current Iran situation. So the Iranian oil trade, China is its biggest beneficiary. It takes in about 90% of Iranian oil exports. And even for Chinese buyers, they're kind of unflinched by all these, because the matter of fact is right outside of China, or rather along the entire trading route from Iran to China, we are seeing a record multi-year high in terms of additional oil being found on the water. So Chinese buyers are really not concerned about all this.
All right, Rong Wei, thank you. Oil trading reporter Rong Wei Neo in Singapore and managing editor Jill Deeses in Hong Kong. We'll have more on oil in the next hour with Fereidun Fesharaki, who's one of the most closely watched experts on energy markets. Well, our next guest is an Iranian-born scholar, human rights advocate, and expert in women's leadership and the Middle Eastern politics. Fariba Parsa is founder and president of Women's E-Learning in Leadership, a non-profit that aims to empower university women to become leaders and make a positive change in their community. She's also author of Fighting for Change in Iran, the Women, Life, Freedom Philosophy Against Political Islam. Good to have you with us. Fariba, first off, what's your take? We've seen protests in Iran several times before. Is it different this time round?
Thank you very much for inviting me. This time is different. We had witnesses for protests of people in Iran. For example, a few years ago in 2022, it was Rachana Amin. It was women who protested against hijab. But this time, it's entire nation. There are women, students, young, lower class, middle class, religious minorities, ethnic minorities. I would say the entire Iranian people, all the nation against the Islamic Republic. And they want a change. They desire, they're asking. Now you know that there are 4 days they have been in blackout and they ask for help.
Are there any historical parallels that you can draw, perhaps Libya, USSR, and where do you think they break down?
So what you can see, there is an agreement. So there is, you can see from inside the Islamic Republic, we have middle and lower range of IRGC, Basij, who do not obey the order from the officers. So you have disagreements inside the Islamic State. They don't know what to do. They lost the control of the situation. Therefore, they are so, because they lost the authority, the control. That's the reason they begin to kill people on the streets. Actually, the number, unfortunately, it's reached to 2,000.
Fariba, we've heard from the U.S. President Trump says that the U.S. is mulling options. Intervention, is likely, some say. Would intervention help?
Yes, because now we have 100,000 of Iranian people on the street in the third week. And now you have been witness for so many people have been killed on the streets, have been arrested, and even the Islamic Republic has brought his proxies from terrorist organization from Iraq, from Lebanon, to kill people on the street. So I think it's the only way that we can get rid of the Islamic regime. I think it's the desire and the wish of the Iranian people, and I hope it will be very fast. And I think I'm very optimistic. I think it would not take so many days.
I'm just wondering if the opposite could happen, because the last time the U.S. and Israel attacked Iran, it sparked Iranian nationalism. It unified the country instead. Might the opposite happen should the U.S. intervene?
Intervene can be different way. It's one of the most important things right now is access to internet. It's a moral and political support. And I think we will be surprised. It's how Israel or United States will support Iranian people. So I can't say which action they have to do, but I think we cannot just be witness for crime against humanity. Right now, in this second, you're sitting here, there are people are being killed on the street. And unfortunately, many of them have been children. So I think the international community are responsible to do some action in Iran.
How do you see Iran leveraging its nuclear facilities? President Trump did mention that Iran reached out to talk about nuclear. I think the Islamic Republic tried to develop their nuclear program as soon as if possible for them, as soon as they can. So negotiation, if you stop for 1 year, 2 years, so they can do it again. So they begin again. So I think the solution to that is just regime change. That's the only way to have peace in the region and in the world. That's the desire of millions of Iranian people. You talk about the region. How might the collapse of Iran shape the balance of power in the region, involving Saudi Arabia, the Gulf nations, Israel, for instance?
As soon as we get rid of the Islamic Republic, so it will be a peaceful relationship with all nations in international community. You say with Israel, and the Iranian regime support with money and weapons, Houthi and Hamas and Hezbollah, so all would not get their support. So that's the change in entire Middle East and world. And so I think the world will be changed. When we witness the regime change and the transition to a democratic system in Iran, is as huge as Berlin Wall or collapsing as Soviet USSR. So that's a huge. Right now we are witnessing the historical moment, and we all just following every second and see how it's going on. And I think things happen so much faster than we think.
Will there be implications on the proxy conflicts in the region, like Syria, like Lebanon, like Iraq?
Yeah, of course. No, Syria, as you mentioned, so they get rid of Assad. So one of the very good friend with Khamenei. That's a huge change in entire Middle East. So Saudi Arabia is the same. You know, the relationship, as I mentioned before, will be changed if we get a new political system. What Iranian people want, a secular democracy with respect for women's rights, and also all ethnic and religious minorities. Iran is a nation of very diverse people, ethnic minorities, groups that we want. Iranian people are very aware and they fight. I don't think they would.
Right.
All the killing would not stop them.
Fariba, you seem to suggest that there'll be some stability in the region should the regime in Iran fall, but that may not necessarily be the case. Who will be in charge of the region? Which voices will come through should the Iranian regime fall? Right now, Iranian people inside Iran, they calling Prince Reza Pahlavi. So that's he said it doesn't mean Iran will become a monarchy, but he said he will lead Iran's transition to a democratic system. So we expect when we get rid of Islamic Republic, we would have a transition for democratic election so people can decide if they want a monarchy or if they want a republic. And there are so many people who are candidates. We have many leaders. And they are inside Iran and outside Iran. So there are many opportunities. I think Iranian people know that the only way we can have peace and prosperity for our country. Right. Fariba, thank you. Fariba Parsa, founder and president of Women's E-Learning in Leadership. Still ahead this hour, insights on AI with Georgetown University's Helen Toner. We'll get her views on fears of a market bubble and the growing anger over sexualized content of women and children facing Elon Musk's Grok. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Fragility in markets on the back of developments in Iran amid Iranian protests. Of course, we have the Trump administration saying it's mulling options, which might include intervention. Lots of questions on whether the Iranian regime can be overthrown. We're also keeping an eye on markets after Powell said the DOJ has served the Fed with subpoenas. We're seeing Brent crude currently up by 0.1%, rising for a third day. Gold currently up by 1.5%. This is how it's looking for the FX market. The dollar weakening after the Fed is served with subpoenas, the yen in particular driving up. Still to come, Indonesia and Malaysia become the first countries to ban Grok AI over its generation of sexual content. Georgetown University's Helen Toner will be joining us with her insights. This is Bloomberg. Welcome back. You're watching Insight. U.S. Energy Secretary Chris Wright is downplaying concerns over President Trump's push for U.S. oil companies to spend at least $100 billion to rebuild Venezuela. He spoke to Bloomberg about why he thinks the plan is achievable.
They're excited to be part of Team USA. They're excited to see a pivot in the business conditions in Venezuela. And if several are already on the ground, they're going to ramp up investments, immediately in the next few weeks. So, yeah, can we achieve $100 billion investment over the next 10 years? I think absolutely. But we're 1 week in right now. So with President Trump's leadership, I think we've had a tremendous week of progress, transformation in Venezuela, and excited to see what comes in the weeks and months ahead.
Well, Mr. Secretary, can you outline any of the agreements that the administration was able to ink today? Because President Trump said that there was going to be a few deals made in that room.
Oh, well, look, we have Chevron on the ground in the country right now, largest oil producer in Venezuela right now. I think with some of the moves that we can do with them, which is just licensing them to move ahead with projects they've already lined up. They mentioned the ability to grow their production by 50% in the next 18 to 24 months. This is the largest producer in Venezuela. That's tremendous.
Well, we know they've been there for about 100 years, I think, as the president said. The question is, who will join them, Mr. Secretary? And I'm wondering, when it comes to incentives and security guarantees, what you can tell us. You heard from the CEO of ExxonMobil, Darren Woods, describing his assets being seized twice. He referred to Venezuela as uninvestable. When you talk about security guarantees, is that a military security guarantee, or would there be private security contractors involved?
Look, we don't know the details of that stuff yet, but what we want to do is put the incentives in place to transform the situation on the ground in Venezuela. I'm sure you've seen the giant rally saying Libre Venezuela. This is a government that for 25 years has just crushed people's rights, crushed their property, made it unsafe. Essentially a large narco, drug, gun, and human running operation. So lots of room for improvement. But I'm quite optimistic that we're going to have to see in the coming weeks how things evolve. But with President Trump's leadership, with the United States' partnership, can we make a pivot and get Venezuela going in the right direction? Absolutely. And the key partners to watch are the ones that are already there. How do their operations change in the next few weeks and next few months? For the re-entrants like Exxon, yeah, that's going to be a longer-term process, of course.
And that was U.S. Energy Secretary Chris Wright speaking with Bloomberg Balance of Power. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Indonesia and Malaysia have become the first countries to ban Grok AI over its generation of sexual content. Indonesia's Ministry of Communications and Digital Affairs imposed a temporary ban on Saturday aimed at protecting citizens from faked pornographic content, and Malaysia's internet regulator followed suit, saying it's limiting access to Grok until effective safeguards are implemented. Our next guest advises policymakers on AI strategy. Helen Toner is Interim Executive Director at Georgetown University Center for Security and Emerging Technology, which provides data-driven analysis to the policy community. Helen, good to have you with us.
Great to be here.
Is Grok a warning sign to other labs, a warning sign to governments? How are you looking at this?
I think what we're seeing with Grok the past couple of weeks with these sexually explicit images that the bot has started putting on Twitter at the request of users, or on X, I should say, is just another example of the number of different kinds of issues, risks, problems that AI can bring, and the speed that they get delivered at, which makes it really difficult for policymakers and the public to kind of orient towards what is going on here, what do I need to worry about, what do I not need to worry about. So I see it as kind of yet another example of the difficulty of being really ready for the many different things that AI is bringing us.
Well, some people are saying that Elon Musk is pushing the boundaries, breaking from the norms of the mainstream because he's playing catch up. Should he be allowed to do this? I mean, have you heard of conversations, within the U.S. government on the action to be taken from here?
I mean, there's certainly a lot of concern starting to spring up around what to do about this case. I think a difficulty here is that a way that we have started to think about, or the kind of AI policy community has started to think about risks from AI, is in terms of what is the marginal risk from any new development or any new product or model. And when it comes to this kind of sexualization, the marginal risk here, so the sort of newness of this, is not that high because there have been other products that really offer these same services. So for more than a year, it's been a problem that high schoolers or even middle schoolers or younger can nudify their classmates, for example, which is sort of illegal, clearly illegal. That's child sexual abuse material, but it's already happening with these very hard to control open source apps. And so when you have that on a platform like X, it's suddenly a new level of distribution, but the problem itself isn't new, which makes it a little difficult for policymakers to grapple with kind of what exactly, where do you set the line and how do you enforce that when it's so widespread on kind of the black or gray market already.
So what is the right response? We've seen the likes of Malaysia, Indonesia banning Grok, and some are adopting a wait-and-see attitude, looking for regulatory clarity. What would you like to see?
I mean, a good start is one of the only laws that has been passed in the U.S. on AI is called the Take It Down Act, which basically requires platforms to give users the option to request that content of themselves be taken down, in particular sexually explicit AI-generated content. The challenge is that's not getting implemented until May of this year. And so right now, X has no obligation to have that option available to request content being taken down. Another challenge is how quickly you can do that, because even if the content is taken down within a day or a week, that's plenty of time for people to download it, upload it elsewhere, and then it kind of has a life of its own. So I think that legislation will be definitely a good step and a needed first step, but it's not clear that it's going to be enough.
How about other labs like OpenAI? Should OpenAI, for instance, be forced to have an adult mode? Should it rethink what it offers out there?
I mean, OpenAI has already indicated that they are going to be making explicit content more accessible to their users. CEO Sam Altman has talked about making erotica more easy to create within their products rather than having it be walled off or disallowed the way it has been in the past. As I understand it, they are planning to make that available in some kind of adult mode, and they have also kind of produced a teenager mode for their ChatGPT product as well. So I think this is all moving pretty quickly, and I think the companies as well are repeatedly being taken off guard by sort of the different issues that they need to be able to handle.
Helen, what's the most important change that is necessary to prevent, the worst from happening?
What I'm really seeing consensus in from lots of different people with lots of different views is we need more transparency around advanced AI development, and we also need more ability for independent third parties to go in and check out what the companies are doing. So this doesn't mean governments telling companies what to do or what not to do. It means governments requiring the companies to tell us what they are doing, and then also letting independent certifiers, third-party auditors, testers go in and see, are they doing what they're telling us? Are there things that we're not hearing about that we should be? I think because it is such a fast-moving space, that kind of visibility-focused intervention is the one that we're seeing the most support behind.
So given the developments that we've seen in AI so far, I'm just wondering whether you see a paradigm shift in how people approach AI in 2026.
I think the big thing that we need to see, and that I hope we see, is people starting to recognize that AI is not just chatbots, it's actually all kinds of things. And even if we focus on large language models, which are the kind of AI that powers chatbots, we're really starting to enter the age of agents. And what agents are is basically AI that does something for you. So software engineers are already seeing that AI doesn't just chat with them in a window anymore. It can actually go in and make changes to their code, do things on their computer. It tends to be that software engineering is where we see the impacts of AI first. And I think what we'll see more throughout 2026 is AI agents starting to be more widely deployed for a wider range of use cases, not just coding, but also managing your tasks or helping you take notes or answer emails. And I think it's really important that people recognize that what we're seeing here is AI that can really do things in the real world, not just AI that sort of spits out text.
So in the end, it is about building better AI models. I just want to quote what your former colleague, Ilya Sutskever, did say. She said that the key to building better AI models may be breakthroughs in an approach called continuous learning. Others say that it is the so-called world models. Can you differentiate the two, and what are your thoughts on that?
Absolutely. So those are two big hot topics right now in the world of AI development. So continuous learning, that's getting at this idea that right now, the way that AI chatbots work, large language models work, is there's kind of two places that they can get information. One is in their training phase. So this is in development up front. And this is where they're taking in lots of text from the internet, lots of examples, lots of hard, complicated tasks that the companies develop in order to train their models. That's kind of a one-time thing. But then beyond that, all you can do to give them new information or context or sort of set them up for a task is at the time you're performing that task. So maybe you want them to help you, evaluate a statistical model that someone has created at your workplace. You can give them that statistical model and they can analyze it for you. But what they can't do, and this is what continuous learning is about, is do it once, get feedback from you about how they did that time, do it better the next time, do it better the 10th time, and then the 50th time, have the kind of experience accumulated that a human expert would or a team member would. And so the idea with continuous learning is, can you, instead of just having a one-off training phase and then what gets called the deployment phase or the when you actually use it, can you have something in between that is improving the model over time, which is not the way that they currently work. In contrast, world models.
Right, go ahead.
Yeah, so world models is a different approach, which is getting at the idea that language models so far have largely just been trained on text. So all they know about the world is things that they have seen in text descriptions of the world. They're not like a human baby or even a dog or a squirrel that can go out and interact with the world and really try to understand kind of how does physics work? Do things fall when you drop them? Things like that. How do people around me interact or react when I say things to them? And so the idea of world models is trying to get more of a grounded understanding and a grounded model of kind of what is actually happening in the world when the chatbot or when the AI system is doing things.
Helen, we know that you were in China quite recently, and we heard from China saying that, perhaps its AI may not be able to leapfrog as fast as the U.S. because of limitations. What's your take on what you saw there in terms of AI development?
Yeah, China has really been going as hard and fast as they can on AI. They recognize that this is a huge deal, and they are trying to make use of it throughout their society. I was there in July 2025 at the World AI Conference, which was a really interesting event. One thing that really stood out to me was even just the messaging around what is going on with AI. This was the same week that the Trump administration released their AI action plan, which was very much framed around U.S. dominance, around the U.S. winning the race, a very kind of America first approach, unsurprisingly. And at the same time, China was hosting an event, this World AI Conference, that was based around global solidarity in the AI era, meaning we're China, we're here to help you, we want to help you develop the best applications you can, we want to help you grow, help you develop. And of course, there's lots more to say about whether countries should take that at face value from China, but in terms of how they're trying to position themselves, they are not focusing on, do we need to be out ahead and sort of quote unquote winning? They're focusing on that kind of broad deployment, trying to get other countries on side in a way that I think the U.S., at least in terms of rhetoric, is less focused on.
Is that the right way to think, the way China thinks? And I'm just wondering, in terms of AI ecosystem in China, how does it compare to the U.S. and Europe, for that matter?
I think the AI ecosystem in China, like the U.S., is changing fast, and so can be hard to get a handle on. One thing that is notably different is how widespread the open release of models there is, meaning that the so-called weights or sort of the statistical values that make up an AI model are posted freely online for anyone to use. This is a really great strategy if you are not the leader. It's a great strategy for the fast follower, because if you're second or third or fifth in a competition to have the best AI model, what's a way you can distinguish yourself is by making your model freely available. And so that obviously is a strategy that DeepSeek famously took, one of the most famous Chinese companies, but many others are taking it. Alibaba's Qwen models are actually by far the most used open source models in the world, beating out American open source models as well as those of other countries. And many other Chinese companies, Z.AI, Minimax, Moonshot, are similarly releasing their models openly.
So, Helen, despite the fact that China says it's going to be hard for it to leapfrog in terms of AI development, is it leading in some areas like surveillance, like biotech, autonomous, for instance?
It's certainly leading in surveillance. I think from the beginning, you've seen in Western democracies at best a yellow light on things like AI for facial recognition or voice recognition, whereas in China, the government has thrown its full weight behind those applications from the beginning. So it's not surprising that they are leading there. I think in other applications, it tends to be a little less clear. They're generally right up there with the U.S. in many cases. Typically, the U.S. does have the edge. One that we're seeing a lot of discussion of this past few months will be really interesting to watch in 2026 is robotics, including industrial robotics. China is far outstripping the rest of the world in terms of how many industrial robots they are installing. And they're certainly showing lots of very exciting looking demonstrations of robots that can kickbox or do flips or do cool choreography. There's, of course, a gap between those cool demonstrations and actual real world use cases. And US companies are also developing quite impressive robotics. So it's not clear that China has the edge there, but I think that's going to be a growing segment of the AI market, and it's going to be really interesting to watch.
Helen, always great to have you on the show. Helen Toner, Center for Security and Emerging Technology. Let's do a check on Indian markets. Been trading for about 3 minutes now. Indian benchmarks coming into today's session on a 5-day losing streak amid growing global headwinds, including a continuing impasse with the U.S. of a trade deal to lessen punitive tariffs and the worsening protests in Iran, which threaten to disrupt the nation's oil-producing capacity, may be another serious challenge to India's economy. A disruption may cut off New Delhi's access to a potential source of cheap oil, even as the U.S. has pressured New Delhi to halt its Russian energy purchases as well. At the get-go, Sensex down about 0.3%, now in losses for 6 days in a row. Let's get more from Sonam Srivastava, founder and CEO of Right Research, a portfolio management service. So what's your take on the weakness that we're seeing in India right now? Kind of a breakaway from what we're seeing in emerging markets as a whole, which have been gaining.
Definitely, I think this weakness has been a pattern over the last year, right? I think emerging markets and even a lot of broader global markets have seen a good year in 2025, but India has seen some weakness. I think the recent weakness is primarily led by, speculation around higher tariffs coming to India due to, Donald Trump's announcement about, sort of speculating on if they could increase the tariffs further. So I think that is the primary reason. And you've seen a lot of weakness in sectors that are exposed to those tariff policies. But if you look structurally, India is slightly underpriced compared to a lot of the peers over the last 1 year. Valuations have moderated. Structurally, fundamentally, domestic economy is pretty robust. There's ample liquidity coming from the rate cuts, and even in the US, the rate cuts are going to be supportive for a lot of Indian stocks. So we remain optimistic. We think this year is going to be good. But yeah, I think we're seeing a lot of volatility in the beginning of this year, right?
Despite the reasons you gave, it's not enough to convince foreign investors in particular to invest in India. In fact, over the weekend, Prime Minister Modi did talk about how India is poised to be the third largest economy in the world. That has not moved the needle. What will it take? What's driving your optimism?
I think I'm optimistic as a fund manager. I'm not, I don't expect that there's a lot of money that's going to come and jump into India, or there's going to be re-rating of India as a whole, and there's going to be a big bull market. I don't believe that, but I think there is still a lot of tactical opportunities. There are a lot of turnaround stories happening in India, a lot of sectors coming back from some slowdown, and then you see there are a lot of balance sheet strength in India. We are coming up in the earnings cycle, so incrementally earnings we expect improvements. There are sectors in India which have been underpriced, where we see movement, like the IT sector itself. The banking sector is strong. There is ample liquidity, and then you have growth companies in India. So structurally, we see a lot of opportunity in India, but not like a big re-rating. Incremental earning opportunities will be there, is what we believe here.
You talked about valuations, which are becoming more reasonable at 2021 times. They're still more expensive than most emerging markets.
Right, but if you look at the growth rates in India, India does demand a premium given the breadth of opportunities and the pace of growth that we have seen. And yeah, I think the valuations did become a little bit scary towards the end of 2024 and the beginning of 2025, and there's been a significant improvement for those levels. Many sectors, in fact, are trading at their 5-year or 10-year averages. So I think in terms of valuation, there is a bit of comfort in various pockets, even though there are certain pockets in the mid and small sectors where valuations are still a little bit of a worry, right?
Sonam, how closely are you watching developments in Iran? Iran does provide India with a cheap source of oil.
Right. I think it's a very big, a significant partner for India, and I think the recent correction also was because after the Venezuela action that US took, and Reliance sort of came out and said that they're no longer sort of importing Russian oil, and that impacted the Reliance stock quite a bit, and then that had an impact on the broader index. So I think the oil economy definitely does impact India, and I think you have to watch out for the geopolitics out there. But yeah, I think Donald Trump's drive to sort of lower oil prices will help India in the long term, sort of helping us contain the deficits, right?
You talked about the earnings season. Indian tech companies in particular will be out with earnings. What are you looking out for?
So I think it's going to be an interesting season. I'm most excited about the commentaries coming out of these companies. Seasonally we expect this quarter to be moderate. There's been a lot of furloughs in the last quarter, and earnings. We expect them to be moderate, sort of flattish for a lot of these companies, but there will be tailwinds coming from a weaker currency for India, which sort of helps the IT sector. You can see transition happening where these companies are sort of pivoting towards Gen AI and Gen AI infrastructure. There is expected growth coming out in the US. There have been a couple of rate cuts, and we expect more in the US, which sort of helps the Indian IT sector. So there is 2026. We expect it to be good for Indian IT, but this particular quarter itself, there will be limited movement, but maybe a lot of positive sort of outlook, right?
Right. AI, of course, the big theme for tech globally. Will that provide a boost for the likes of Tata, HCL Tech? Which companies in particular might get that AI boost?
So we're seeing everybody from the large caps to mid caps, everybody sort of announcing and talking about AI as such, right? So TCS right now has sort of announced that they're doing ARR of 1.5 billion on Gen AI use cases, and they're sort of investing a lot on data center infrastructure. They think that AI is just picking up. There have been a lot of pilot use cases, and now enterprise AI is picking up, and companies are trying to get AI ready, where these Indian companies who are enabling infrastructure, enabling data centers and the data clarity, they will find use cases there. So I can see TCS sort of doing incremental movements there. A lot of mid-cap companies like L&T, Mindtree, Coforge, etc. are sort of doing use cases over there. I think right. The pivot is definitely happening there. It will definitely impact Indian IT's incremental revenue also, given that right. AI could take away some of the roles in India. But I think with AI coming, Gen AI coming in, there would be incremental revenues, tab expansion these companies are expecting. Yeah.
Sonam, thank you. Sonam Srivastava of Right Research. Do subscribe to our Markets Daily Indian newsletter for key news and movers in this fast-growing market. Sign up at Bloomberg.com/newsletters. Still ahead, we'll break down the geopolitical risks shaking up global energy markets, from the Iran crisis to the future of Venezuela. Stay with us for insights from FGE Naxon ECA Chairman Emeritus Fereidun Fesharaki. More to come. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Here's a look at where Asian markets stand as traders weigh concerns over the Fed's independence. After Chair Jerome Powell says threats of a criminal indictment are a consequence of interest rate policies that clash with President Trump's demands for more cuts. In terms of the gains in Asia, well, tracking those gains in the U.S. where we saw the S&P touch yet another record high. The MSCI Asia Pac Index up by 0.5%. Not too bad considering all the risks that we're seeing out there. In terms of S&P futures, pointing to a lower open, down by 0.5%, and in terms of the dollar, it is in negative territory. When you take a look at the benchmarks in Asia, they are in positive territory. Take a look at where Kospi is right now, up by about 0.9%, and the TAIEX is up by more than 1%. For more on the markets, let's bring in Bloomberg M Live strategist Mark Cranfield. Asia seems to be quite comfortable, but the U.S. pretty hesitant.
Actually, we've seen this outperformance for a while. It's something that's been going on for several weeks, really, where money is starting to shift to other parts of the world. Asia seems to be doing quite well. Parts of Europe also attracting flows as well. I mean, a classic example is Nvidia against TSMC. Even though they're so closely linked, TSMC has been outperforming Nvidia for weeks and weeks, and by quite a margin as well. And we've got their results coming up later this week. And if the numbers are as good as the sales projections that we saw a few days ago, that could continue as well. So clearly people are much more comfortable with the outlook around Asia and some other parts of the world.
And now, of course, troubles with the Fed, that feud between the Fed and Trump continues. Well, some say it didn't go away anyways. Could that, I guess, be the impetus for greater rotation from the U.S. to Asia?
Yeah, I think it will definitely add to that. I mean, the problem for investors here is it's a bit like looking at a company where the CEO is embroiled in something that takes his attention away from the job. And this is what investors are concerned about, is that Jerome Powell is going to have to spend a lot of time, and maybe other people on the Fed as well, defending these allegations, and they won't have their eye on the ball for their most important job, which is seeing whether or not they need to raise or lower interest rates, and generally how they transact monetary policy. So if their time is taken away from that, what does it mean for assets? Are they going to become more unstable than they already are? This is how investors have to gauge this. And at the same time, this is happening not in isolation. This is happening at a time when people are very edgy already about the geopolitics going on in the world. It's not a great situation.
Let's talk about geopolitics. We wake up to yet another crisis in the world today. Iran is case in point. How is this not weighing sentiment in Asia?
It is to some extent already. You look at what's happening with precious metals. I mean, the cleanest way to express your view on the fact that you're fearful about what's happening in the world is to buy gold, buy silver, those kind of assets. And particularly as they're kind of neutral. The U.S. Treasuries, although the Tokyo holiday today, but futures are trading, they're fractionally higher. But you would expect, under normal circumstances, a very strong bid for U.S. Treasuries. But the problem is the U.S. is right in the middle of all of this. Gold and silver are totally neutral in that regard. So that's why investors are piling into those, because they see them as the great hedge for anything that goes wrong in the rest of the world.
And not too long ago, you think the yen is the one where you should be taking cover in, but not the case when a snap election is coming up.
Well,
possibly.
It's beginning to look a bit like the Abe days. When Abe was the Prime Minister, we had the yen weakening and equities doing extremely well. There's a bit of that going on here. We saw the rumour started on Friday, and we saw the Nikkei futures just screaming and just going through the roof. And people are obviously expecting that once Japan comes back to work tomorrow, it's going to be a great start for Japanese stocks. At the same time, yen weakening on the flip side. So Prime Minister Takaichi hasn't come out defending the yen, which is why traders feel fairly confident that they can push the yen to weaker levels, because for now it would need her to come out and say, I want a strong currency. She has not done that. So people think that she's going to make the DOJ go slowly, only raise interest rates over a long period. Look how long it took them to raise interest rates in December. Months and months of discussion before they did it. That's all keeping the yen relatively weak. She's probably much happier to see equities keep going up.
What's the floor for the yen?
Well, we've seen intervention in the past around the 162 quite aggressively, maybe if we get to there. But it's the pace of the yen moves which really matters. Since Takaichi was confirmed as leader of the LDP, the dollar yen has risen about 10 big figures. Usually, that's a warning sign. That tells you that the Ministry of Finance are on high alert. But it's been relatively smooth and slow. If it had been within the space of a couple of weeks, alarm bells would be going off all over the place. That hasn't been the case. It's been relatively gradual. If it's a slow grind above 160, again, they may just ignore it for the time being.
Mark, stay with us. Rachana Mehta is co-head of regional fixed income at Maybank Asset Management. She joins us today as well. Rachana, we have the Fed, we have Japan, we have Iran, Venezuela. I mean, you can expect volatility, and some say when there's a lot of vol, you can make money quite easily.
Yes.
Can you in 2026?
Actually, I think it's going to be very, very difficult. Yes, when there's a lot of vol, I think short-term traders can make a lot of money, like you have to actively trade. But the problem is there's so many short-term traders out there, like quant funds have come into picture, models have come into picture over the last 30 years. So I think that has changed the entire landscape. So the stopping out is much faster. So no matter what people say, volatility is good. But with volatility, if there's a trend, then it's good. But if the trend is up and down, I think it may not be very, very good overall for 2026, because we also have midterm elections and we have a lot of things going on for 2026 in the year of horse.
Fire horse.
Fire horse, yes, yeah.
Geopolitics is notoriously difficult to trade. A lot of people talk about it, but they don't really want to put any big bets on because it's hard to make money from it. Is there anything you see in the landscape that justifies taking a bet on the geopolitical situation?
I think, it's going to be very, very tough, but I'm very surprised by the market. You look at no matter what happens, as you said, today the market's up despite we saw weekend what happened, correct? So from that perspective, I think markets is very relaxed about this because they've seen so many things happening throughout the year. But I feel the gold, as you said, is a very, very important asset class. And one thing about dollar diversification, as you said, the treasuries are not moving much. So I think people are literally worried that which is the most liquid market out there. So I think we'll see more shift into gold. Like I was expecting a correction, but it didn't happen given what happened in Iran during the weekend. So I think gold will be an important asset class to have in any portfolio because people never thought that for a long time. So I think that is one thing. Every dip, people are going to buy that.
But people have been buying gold. That's why we're seeing prices rise. How much more gold should you be holding in your portfolio then?
But you'll be surprised. Actually, people have been buying, but a lot of institutional investors have not bought to the extent of 10-20% of the portfolio. So I feel that, generally it was about 10%, but I feel given the world we are living in with dollar debasement question coming from a long-term perspective, I think about 20% of gold in the portfolio would be very interesting for me going forward, given that everybody is talking that they want to bring their money in, basically they want to stay away from dollar to some extent.
On the surface, you would think some of these things are dollar negative, US dollar negative. But you can see there's a bit of a divergence going. Even within Asia, we've got some currencies rising, some currencies falling.
Yes.
Is there going to come a point in time if we have a continuation of this uncertain environment, will there come a point in time when we'll be able to say, yes, just be short of the US dollar, you're pretty safe, doesn't matter, or is it still going to remain a complicated situation?
I think we are going to be in a complicated situation. I don't think that, just a dollar is going to work. I think from a medium-term perspective, it will work. But this year, I am expecting some dollar strength, definitely, given we have so much of geopolitical uncertainty. So I think it will be first quarter dollar strengthens, and maybe before midterm election, dollar starts weakening, especially the Fed independence comes into play. So I think from a medium term, it's very easy. But this year, definitely, I don't think so. Like last year, dollar was down almost about 10%. But this year, it's not going to be so easy from a dollar perspective.
Dollar strength is also a function of Fed moves.
Yes,
some say perhaps the Fed is going to cut fewer than what the market has already been priced in.
Yeah.
What happened to the dollar?
Yeah, I think actually most of the market is pricing about 2 cuts this year. It's just that where some people is talking about in Jan or March. So I think a lot of people are pushing back in June and September. We always had 1 to 2 rate cuts this year, and most probably we are thinking June and September. So I think it's the pushback of the rate cut which is happening, given that we have at least a labor market which is stabilizing. It's of course weakening, but it's stabilizing. At this time, consumption is still very, very strong in the US, and the tariff impact has been limited so far. So I think that is why the pushback. But the 2 rate cut, I think, is most of the market participants are pricing in.
Which crosses are the most effective?
In terms of we look at from a dollar perspective most of the crosses. So we continue like Aussie dollar from that. Given that RBI has come out and said that they are not going to cut rates, and maybe there's a chance that if inflation stays higher and growth stays stronger, I think, and plus commodities is a very important story. So I think Aussie can continue to do well against US dollar from a medium-term perspective.
How do you like the look of the Chinese yuan? It's held up very well under the circumstances. I mean, the PBOC seems to be steering the dollar yuan rate lower. They're doing a lot to support, the Chinese authorities in general are doing a lot to support the domestic equity markets, which are also holding up pretty well. Do you think that the yuan is almost becoming a little bit of a haven currency within Asia?
I don't think so it's a haven currency, but from a medium process, because China is really clearly focusing that they need a stronger yuan to have that faith in China, correct? Everybody wanted a weaker currency to bring their way out of exports and all, but now Asia is realizing it. A weaker currency doesn't work. If you want inflows to come into the country, you need a stable and a stronger currency. And I think China, given that it's moving towards domestic-oriented economy, and you see the fixing every day, I'm so surprised. Correct? On Friday, the dollar was stronger, but today they fixed again the renminbi stronger despite the overall dollar strength. So I think definitely China is sending a signal that they want a stronger RMB going forward. And of course, maybe there's, I think US also was talking about like a weaker dollar. So we have seen some bilateral trade agreements where they've said that they're monitoring all the trade flows for a few countries. So I think from that perspective also, China doesn't want to be in that. And that is one of the reasons they're actually fixing the RMB stronger to have that strength and forcing that China is ready to have a stronger RMB.
But the Chinese yuan is not a reflection of the Chinese economy, which is struggling to overcome all the challenges.
Yeah, absolutely. But they can't bring their way out of exports, correct? So it will take some time to reach there, but they want to show the world that, yes, you can believe in China and Chinese renminbi be stronger and stable going forward. Then it can change the perspective, correct? So I think, yes, the growth is, we have seen at least it's stabilizing. Maybe it's not weakening. So from that perspective, yes, it's not going to be as strong, but slowly it will take some time. So they have to bear that pain for a long-term gain.
How are you assessing the opportunities in the fixed income market?
Yeah, actually, I feel that we are more bullish on Asian fixed income market compared to US. And the reason is, I believe that there's a lot of hyperscaler issuance, like US IG market is going to be big this time of year. I think there's a big supply going from all these hyperscalers. So that is going to actually, for me personally, the US IG spreads will widen. Because Asia, the supply is going to be limited, and I feel that Asian credits, so far Asian credits have been ignored, but I think this year will be a good year for a carrier for Asia because Asian demand is strong and we are in a better position in terms of the supply side, and I think our trade fundamentals are stable compared to I think the supply will make sure that Asian credits do better. And given what is happening in Latin America, I think that part, because last couple of years Latin America has been very, very strong, so that part of flows may come back to Asia. So we are in a way pretty bullish on Asian credits from that perspective.
In the Asian currency space and fix it, is there any places that stand out where you could get some currency appreciation and appreciation in the local currency bonds in Asia?
Yes, absolutely. We like Singapore dollar and we like Malaysian ringgit. Those two countries definitely stand out because I think actually I was not expecting MAS to tighten. In fact, I was expecting last year they may ease, but given what's happening in terms of inflation and the strong growth, I think that there's a very high likelihood they may steepen the slope in April. So from that safe haven perspective you're talking about, maybe the Singapore dollar should do well. And ringgit, we've seen a lot of inflows into the country with semiconductor, and Trump has recently signed a deal, and with Singapore, Johor, the bilateral trade agreement, I think Malaysia should do well from a long-term perspective.
You know, the high yielders, like the likes of Indonesia, where are you with that?
Okay, that's an interesting question. I feel that actually from a medium, over the last couple of years, Indonesia has been focusing on fiscal deficit, and that's why the growth has been not very, very strong because they've been so dependent on we don't want to spend. But I think maybe we should give them a chance, like as long as they don't breach the 3% and they're trying to grow the economy and spend some money. I think Indonesia, if you ask me personally, should do well from a medium-term perspective. But from a currency perspective, I think maybe 16,900, 17,000 will be a very good, interesting, because it reminds me of 1997 financial crisis when Indonesian rupiah touched almost 17,000, 18,000, and that was a very good buy, correct, if you had bought rupiah from that perspective. So I think it should stabilize around this level, and I think as long as they maintain the deficit, but not like 2.5%, they always underspend over the last couple of years. So I think people are in a shock that they've spent almost 2.92% of GDP. But as long as they maintain the deficit target, I think Indonesia stands a chance because the population is very young. The growth can actually revive from a medium-term perspective.
What policies in Indonesia are you most concerned about?
I'm not concerned from that perspective, but I'm just saying that like overall, if they focus more on sectoral growth and AI and technology investment, I think Indonesia can do pretty well.
How about India? I mean, the currency's been struggling for some time.
Yes,
Central Bank has started to defend it. Hasn't had a huge impact so far. I mean, what does India need to do to stabilize its currency?
I think, yes, one of the most important things, I think the trade deal which has been delayed, correct? We have the tariff ruling, I don't know, it keeps getting postponed, but maybe Wednesday. But I feel that oil price definitely benefits India from that because low oil price. But I think India needs to actually think about, I think as long as the trade agreement is signed, I think Indian market may really boost up this year. Otherwise, it will stay stable. I'm not saying that the big downside, but otherwise it will be more stable compared to what we saw a couple of years, like especially last year when the currency was weakening. I think currency may weaken another 1 to 2% if trade deal is not signed. But from a long-term perspective, India is still a very good story.
Is there another bigger issue when it comes to India? Because people talk about the potential of India, yet we see the currency so lackluster. We had Modi coming out over the weekend saying it is supposed to be the third largest economy in the world. That didn't move the needle at all. But is there a fundamental issue that traders are worried about?
I don't think so, because I feel that the currency was weakening. Anyway, generally, all the currency, if you look at Southeast Asian currencies, were weakening compared to North Asia last year, because it's all an AI theme, correct? Whereas India is little lagging behind from the AI theme. So I don't think so that and currency from a RER perspective, I think it's not that weak, maybe 1 to 2% weaker if you look at the RE, the whole basket. So I'm not that worried about India. I think India has got a big potential in terms of growth. And in fact, Modi's government has done the right thing in terms of bringing up the structure, cutting down the GST to go through this trade phase. So I'm not that worried. I think medium term, India has got a big potential.
We've got a lot to worry about.
Yes, I know.
Iran,
absolutely.
Russia, Ukraine, Venezuela.
Yes,
if you had to pick one, which one concerns you the most?
Okay, I'm not sure about that, but maybe all three concerns me. Because I think at different point in time, different things will concern. But as of now, I think Iran is a bigger issue. I'm just a little worried how the whole thing is going to unravel.
How is this year, how are you framing investing in 2026 differently from 25?
Okay, 25, at least there was a trend, and then you could take you knew that you can take long duration view. But I think now, if you look at, and there was a rate cutting cycle, correct, last year. This year, if you look at the developed markets, I don't see many people looking to rate cut. Japan is going to hike. Europe is going to keep the rate stable because last year was all rate cuts. So I'm more worried from that perspective that you don't see much rate cuts, and of course the deficit is ballooning everywhere. Though this year I'm not worried about deficit, maybe in 2027. But so my worry is on duration. So I don't know how to pick the duration call. When should we pick the duration call? So that will be interesting if we can get the right call in terms of having a long duration, correct? Because if you look at the 30-year GGB also is sold off so much, correct? So I know everybody wants a steeper curve because they're thinking 3-5 years, but maybe a flattening of the curve for when you pick the right time to put a curve flattener trade will be interesting. And now in terms of currencies, I think as you said, it's very different. So you have to pick the right crosses and the right choice to make alpha.
What is your top conviction call for 26?
Oh, 26, I think long Aussie and maybe long ringgit from that perspective. And in terms of Asian credits.
Sorry, long Aussie, long ringgit.
Yes. And then maybe Asian credits. I think just try to pick high yield credits. I think they still offer value, and Asian IG bonds giving an attractive yield of 5% is still attractive for an overall portfolio.
Interesting insights, Rachana. We have to leave it there. Rachana Mehta, co-head regional fixed income at Maybank Asset Management, and of course our very own Mark Cranfield, and life strategist. Still ahead this hour, German Chancellor Friedrich Merz set to meet India's Narendra Modi as India becomes his first destination in Asia. We'll look at what's topping the agenda. This is Bloomberg. Welcome back. You're watching Inside. German Chancellor Friedrich Merz is set to meet with Prime Minister Narendra Modi on Monday as he begins his 2-day India visit. Let's get a preview with Bloomberg's Sudhi Ranjan Sen in New Delhi. Sudhi, what's on his agenda today?
Well, there are a couple of things that are on the agenda. One, is, of course, is deepening India-German ties. And what does that mean? We are going to see, agreements and MOUs, both leaders kind of, agreeing to deepen relationship. And in the agreements, we are likely to see in the area of semiconductors, German companies investing more in India. There is the element of defense cooperation. And it's a very interesting thing in the defense cooperation that India and Germany are moving to. That's joint production. That's design, develop, and jointly produce complex platforms in India with German help. In fact, last week, me and our colleagues and I, we reported about Germany and India trying to make submarines in India, which has been a project that has been under discussion for some time. It's likely to come to a fruition soon. It's at the last stages. On the other hand, there is also going to be, developments on or agreements on critical minerals, because Germany is also trying to reduce its dependence on China on critical minerals, and the countries are going to look to come together, work together on these areas.
So it is a significant visit. Deals are anticipated. We're also expecting to hear from U.S. Ambassador to India, Sergio Gore, shortly as he arrives in India to assume his post. What do we know about him?
Well, the big thing about Sergio Gore, and which from the ground in India we are also getting to hear, is the very fact that he's close to President Trump. India is hoping that the relationship that has kind of gone off rails, off track, is could come back. And from New Delhi, that is the hope that the new ambassador to India, U.S. ambassador to India, will be able to iron out the differences, get the relationship back on track. Mind you, the trade deal seems to be drifting further and further away, while India was one of the first countries to go and meet, start the negotiations in the trade deal. Prime Minister Modi was one of the first few leaders to go and meet President Trump in White House.
Of course, there are developments, particularly in Iran. How is India looking at it, given that the U.S. is mulling options and Iran is a supplier of cheap oil to the country?
Well, India-Iran relationships go back decades. It's also a historic relationship. There are many Indians. In fact, around 10,000 Indians are still there in Iran. It's very unlikely that India is going to take, stand with the United States or even with the European Union when it comes to sanctioning Iran anymore. And also the entire issue of crude, Iranian crude is there, because earlier India used to depend heavily on Iranian crude. That has kind of gone off the market with the sanctions on Iran. India has made requests earlier to the United States that if Russian crude is not available, then there should be other sources opened up.
Sudi, thank you. India government reporter Sudi Ranjan Sen in New Delhi. Still to come, we'll get the outlook for energy markets with veteran analyst Fereidun Fesharaki as investors assess supply risks amid unrest in Iran and Venezuela. Keep it here with us. This is Bloomberg. U.S. Energy Secretary Chris Wright is downplaying concerns over President Trump's push for U.S. oil companies to spend at least $100 billion to rebuild Venezuela. He spoke to Bloomberg about why he thinks the plan is achievable.
They're excited to be part of Team USA. They're excited to see a pivot in the business conditions in Venezuela. And if several are already on the ground, they're going to ramp up investments, immediately in the next few weeks. So, yeah, can we achieve $100 billion investment over the next 10 years? I think absolutely. But we're 1 week in right now. So with President Trump's leadership, I think we've had a tremendous week of progress, transformation in Venezuela, and excited to see what comes in the weeks and months ahead.
Well, Mr. Secretary, can you outline any of the agreements that the administration was able to ink today? Because President Trump said that there was going to be a few deals made in that room.
Oh, well, look, we have Chevron on the ground in the country right now, largest oil producer in Venezuela right now. I think with some of the moves that we can do with them, which is just licensing them to move ahead with projects they've already lined up, they mentioned the ability to grow their production by 50% in the next 18 to 24 months. This is the largest producer in Venezuela. That's tremendous.
Well, we know they've been there for about 100 years, I think, as the president said. The question is, who will join them, Mr. Secretary? And I'm wondering, when it comes to incentives and security guarantees, what you can tell us. You heard from the CEO of ExxonMobil, Darren Woods, describing his assets being seized twice. He referred to Venezuela as uninvestable. When you talk about security guarantees, is that a military security guarantee, or would there be private security contractors involved?
Look, we don't know the details of that stuff yet, but what we want to do is put the incentives in place to transform the situation on the ground in Venezuela. I'm sure you've seen the giant rally saying Libre Venezuela. This is a government that for 25 years has just crushed people's rights, crushed their property, made it unsafe. Essentially a large narco, drug, gun, and human running operation. So lots of room for improvement. But I'm quite optimistic that we're going to have to see in the coming weeks how things evolve. But with President Trump's leadership, with the United States' partnership, can we make a pivot and get Venezuela going in the right direction? Absolutely. And the key partners to watch are the ones that are already there. How do their operations change in the next few weeks and next few months? For the re-entrants like Exxon, yeah, that's going to be a longer-term process, of course.
U.S. Energy Secretary Chris Wright speaking with Bloomberg Balance of Power. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. HSBC's asset management arm has been given the green light to open a branch in the United Arab Emirates, following it to tap one of the world's fastest growing wealth markets. The bank's Asia and Middle East CEO, Daisy Ho, told us more about their plans.
We are the first one amongst all the global asset managers to obtain a license from the local regulator, Securities and Commodities Authority, to provide investment and portfolio management services. So we are now setting up a UAE branch based in Dubai and offering a range of onshore funds.
And specifically, what offering can your clients now look forward to as you establish what strategies you'll be looking to present to them?
So our mission is very simple, is to empower our clients to invest in our world-class global strategy through an onshore platform, through the local gateway. We are launching 10 funds with a range of asset classes in fixed income, equity, multi-asset, and then they are diversified, be able to help the investor to diversify their portfolio.
In terms of how you plan to expand your presence there, can you tell us a bit more what the plans are going to be? Are you going to be hiring more people in the UAE, for example?
So we have long-term commitment in the Middle East region. When it talks about hiring and people, that is our commitment in the region. In fact, setting up the branch is the commitment to invest in talent. And our objective is to continue to attract top local and international talents to be able to work with our clients there locally.
Can't help but ask, there's a lot of instability, potential instability with the news on Iran over the weekend. How are you assessing that component of risk as you run that new business now?
So geopolitical events definitely in focus in the first 2 weeks of the trading weeks are here. And then similar to 2025, we believe the geopolitical events will continue to have important influence of the market development. So when we talk about geopolitical events with our clients, there's a lot of conversation centered around market volatility because of the political event and because of the macro and economic environment. So market volatility definitely is one of the big topics. Leading to that is diversification. So when we talk about the market, the investment strategy with our clients, most of them telling us that a complex economic and geopolitical environment has actually prompted them to look at or change the playbook, including reassessing the investment strategy to look at the diversifiers away from the U.S. assets.
So you think that sort of this whole dollar debasement trade we talk about, right, where I short the dollar, I go into precious metals and the like.
Alternatives.
Is that going to continue on, you think?
We have been talking to our clients a lot on their investment strategy, especially for 2026. Yeah. There are a few key investment trends that we have seen. First of all, longer term, right? This is an emerging trend where clients are looking to add alternatives to their portfolio to diversify away from the traditional asset classes. Second of all is to add additional alpha sources. Second trend that we are seeing is asset allocator diversifying away from the U.S. assets. For the trends that just now you mentioned, precious metal, including gold. So those are the big trends that we are seeing. And closer to this part of the world, that what we have seen is the notable shift in terms of sentiment towards Chinese equity and Asian equities. So as a result of the very exciting AI development.
What is HSBC doing as far as bolstering your private market solutions for your clients, to the point you're making, right? They're not looking just for alpha, but for hedges and some structural uncorrelatedness. I'm not sure if I'm inventing a word there, in terms of their portfolio.
So at HSBC Asset Management, we aspire to provide an investment solution that be able to help our clients to weather the market volatility, as well as creating values for their portfolio. So apart from having a full range of traditional asset classes in equity, fixed income, multi-asset liquidity, we also invest a lot in developing our alternative capabilities. So this is the trend that we are seeing, starting from the institutional investor. And now we are also seeing the pickup in the wealth space as well.
Right.
Does it give you more appetite for acquisitions? I know back in 2023 you made acquired this Singapore Silk Road property. Are you looking to make any more acquisitions?
So talking about acquisition, India is a very good example. On top of Silk Road acquisition that we have made, we have acquired L&T, local asset managers, and then helping us to complete the full range of capabilities in India. Now we have full suites of equity, fixed income, multi-asset, and liquidity products there. We are also having a very positive view in India over the longer term. So we will continue to look into different opportunities when the right moments and opportunity comes, and we're definitely open-minded in terms of what we are looking at.
Has the bull market helped your business?
Definitely. Yeah. We are very pleased to see Asian markets, emerging market, the conversation that we have had with our client coming back, China as well. That also due to structural reform in the emerging market, as well as some of the excitement in the AI sector.
That was Daisy Ho, Asia and Middle East CEO at HSBC Asset Management, speaking to Bloomberg's David Inglis and Yvonne Mann. Let's do a check on oil prices. They're holding on to gains on the back of accelerating tensions and demonstrations in Iran. The possibility of disruption of Iran's oil supply weighing on sentiment. Brent crude currently up about 1/10%. New York crude up by as much. Let's get insights assessment with Fereidun Fesharaki, Chairman Emeritus at FGE Nexen ECA, an international energy consultancy. He's widely recognized for pioneering oil and gas market analysis and is also a member of the National Petroleum Council. Fereidun, good to have you with us. Why is the energy market nervous? We've seen demonstrations, protests in Iran before. Is it different this time round?
Well, this time is definitely different because this could be the end of the Islamic regime and a big change in geopolitical picture. But actually, the markets are not nervous. I mean, look at the prices. A little bit up, a little bit down. Nobody really expects that any attack on the Iranian oil facilities, the attacks, if it comes from the U.S., and I expect within the next 48 hours to see an action by President Trump, it will be hitting the security forces, the Revolutionary Guards, and the missile sites. So actually, with Venezuela and Iran, the market is yawning.
Is the market yawning partly because of the glut in the oil market?
Partly is that, partly because if there is a glut in the oil market, which is definitely the case, but then President Trump says, I'm going to bring so many people into Venezuela, and Venezuela has the mistaken argument that Venezuela has the largest reserves in the world is bandied around, then that should be reducing the prices even more, but it doesn't, because nobody takes those things seriously.
The implications of Iranian oil. How important is Iranian oil in prices today, in OPEC's supply management? How significant is it compared to perhaps 5-10 years ago?
Iranian oil is quite significant. The total production of liquids is about 5 million barrels per day. It's been rising under the Islamic Republic. 2 million barrels per day is exported as crude, mostly to China. About 1 million barrels per refined products is exported, and the rest are used internally in the country. So it is significant. If the Iranian oil is lost, then there would be a dramatic shift in the price upwards. $75, $85, $90 a barrel will be seen. But as I mentioned earlier, nobody believes that the Americans or the Israelis would attack the Iranian oil fields, because they want to preserve this for the next leadership in Iran. They don't want to destroy the infrastructure. They just want to destroy this government.
Could there be too much complacency in the oil market? There's been so much uncertainty. We've seen surprising moves from the U.S. itself. And bear in mind as well those nuclear facilities which could be used as leverage by Iran.
I think the Iranian regime will collapse in the next few months, if not earlier. I don't think the Iranians would have anything to leverage. All they have to do at the moment is to find enough soldiers to bring in the streets to shoot at the people. So it is on the brink of end of the day. It's very close in front of us.
How about the Strait of Hormuz? It is now a global energy choke point. What are the chances? What's the risk of disruption in the Strait of Hormuz?
I think very minor. The Iranians bluff. They know that if they close the Strait of Hormuz, it'll be open not only by the Americans, but also by the French and the Brits. They also, need to keep in mind that the Strait of Hormuz is a two-way street. A big portion of Iranian food, maybe 1/3 of it, is imported through the Strait of Hormuz. All the industrial goods which keeps the Iranian economy going enter through the Strait of Hormuz. And nobody is going to attack the Iranian oil fields. Nobody's trying to stop the exports. So why close the Strait of Hormuz? So I don't see that as a scenario, as a viable scenario at all.
Fereidun, I'm just wondering how China might be viewing developments in Iran. It is one of the biggest buyers of Iranian oil, along with India for that matter. How concerning is it for a country like China?
Well, just to correct, India is not buying any Iranian oil. It's just China alone. So it's the single buyer. And of course, for the Chinese, they get cheap oil and they have guaranteed supplies. The Chinese and the Russians are going to be big losers out of the Iranian and this current revolution in Iran, because they will lose their access, they will lose their friendships, and they will lose the power base inside of Iran. Legitimately, all the Iranian people, they dislike the Chinese and the Russians, and they're all pro-American and European. So this is totally different from the picture that the government portrays. And so that is the picture in front of us. So yes, China would be a big loser in terms of losing access, but they get a $4 a barrel discount, so they lose a little bit of cash, but there is plenty of oil in the market, they can go and access it.
So what are the alternatives to China? Which options do you think China will go?
Well, China buys from all the Middle East countries. There is so much crude available in the market. The Chinese go prepared to pay the market price right away from Saudi Arabia, from Abu Dhabi, from Iraq. Plenty of supplies available. The market is suffering from a surplus, not a shortage. So there is plenty of oil available. It's just that you get your $4 discount, then you have to pay the market price. And for India, for the Russian oil, they have to pay them market price, but there is no Iranian oil going to India.
Has India ever relied on Iranian oil, or did it stop recently?
No, they've never bought Iranian oil. They bought oil from Russia and Venezuela. Now, Venezuelan oil is
quite contrary.
Yes, but they never.
It is quite contrary to some of the reports.
No, if there is a report, is a mistaken. Indian refineries are all our clients. We know for sure they don't buy any Iranian oil. They haven't bought them for years.
Fereidun, how about OPEC? How might OPEC and OPEC Plus be viewing developments in Iran?
Well, it all depends if you expect to lose some volume, and I don't think there is a real chance of losing volume from Iran, but there will be probably new leadership, new managers. There will be an interruption in supply. Certainly, if there is a handover at the regime change, there is not going to be a smooth transition. All the ships which are flowing, the shadow fleet is going to be impacted. It's going to be an interruption. So OPEC sees that is as a positive move on the price side, because any kind of interruption helps the price of oil. They expect the price of oil to go up a little bit.
It wasn't that long ago that Iran was a strategic swing factor for OPEC. Has that decisively now moved to Saudi Arabia?
Yes, absolutely it has. It's all the Saudi, Abu Dhabi, and Kuwait. The three of them, they decide everything, but mainly Saudi and Abu Dhabi.
Earlier you talked about Venezuela. You've expressed frustration that people are talking about how, Venezuela holds the largest reserves in the world and that the U.S. might rely on it for refining. Talk to us about what's driving that frustration. What are people getting wrong?
Well, 85% of the reserves of Venezuela is very heavy-grade oil, which is called the Faja Belt. And the Faja Belt crude is not usable. You can't dig a hole and bring it out and sell it in the market. You have to take it. You have to spend 5 to 7 years to manufacture oil that then you can sell to the refineries. So anybody's, Chairman of ExxonMobil said a couple of days ago, and very important, he said, Venezuela is uninvestable. I'm not investing any money. So President Trump says today, maybe we'll exclude ExxonMobil. Chevron is interested because it's been working in there for a long time. But basically, nobody is prepared to spend 5-7 years of time and money to produce oil for a country which may in the future take the oil away and nationalize the oil away. So if I'm an investor, it makes no sense to invest in Venezuela. And anyway, it's important to realize that when Venezuela was totally open, pre-Chavez, the Venezuelan oil production was only 2.5 million barrels per day. There was never a big move to increase production of oil from Venezuela. So if the Saudis have less oil reserve than Venezuela, how come the Saudis are producing 10 million barrels per day and Venezuela at best produce only 2.5?
So you're saying, Fereidun, that President Trump is wrong in thinking that he can revive Iranian oil production?
Venezuelan oil production.
Venezuela oil production.
Yes, he is mistaken. It takes 5 to 10 years to bring it up to the 2 million barrels per day, or 2.5 million barrels per day that it used to be. There is no quick switch of suddenly bringing people in there and they dig holes and oil comes out. And if I'm an investor, I don't see any future in investing in Venezuela. It's a long-term proposition, and with the government that in 10 years from now, 8 years from now, Trump is not going to be there, you don't know whether you can trust them. And I would not invest my money. It can cost up to $30, $40 a barrel to make the crude before you can sell it to a refinery.
Having said that, Chevron is not the only company that has expressed interest, but those expressing interest are looking for incentives as well as security guarantees. What do you understand from incentives and security guarantees? What form might that take?
Well, they would like to have insurance on their investments, guarantees that the investments will be paid back if they're nationalized. And, the assumption is that President Trump is going to be there forever. He's not going to be there forever. And this project, the project life, is longer than the terms of the U.S. presidency. So this is why Darren Woods says it is uninvestable. And I perfectly understand what he says. What he says makes sense. Other people want to take a risk, they can. Chevron already has infrastructure in place. It makes sense for Chevron, but doesn't make sense for anybody else.
Trump maintains he wants oil to go lower. He wants oil to get to 50. What will it take for oil to get to that level?
I think by the middle of next year, it may get there. $50 WTI, $55 Brent. The surplus in the market may make that happen. Then, of course, you would have a big drop in the production of oil in the U.S., lots of drop in the production in other countries. So while the demand may not be stimulated too much, but you would have an impact on supply. So the markets will readjust, and the prices will slowly go up. My guess is that by 27, 28, the prices will be back at $70, $80 a barrel. But I see it at 55 by the middle of this year.
Fereidun, thank you so much for your time today. Fereidun Fesharaki, thank you so much for your assessment. Before we go, here's a look at our guests for tomorrow. Asian earnings are kicking off with a focus on Indian tech. We'll speak exclusively with Tata Consultancy Services CEO K. Krithivasan after the report later today. And we'll also hear from HCL Tech CEO C. Vijayakumar on the back of their results. Plus, we'll be joined by MIT professor and Nobel laureate Darren Acemoglu to talk AI and the future of labor. That is it for Insight. Horizon Middle East and Africa is next. Keep it here with us. This is Bloomberg.